Hello everyone, you're at the latest market news on April the 9th, 2021. Hyundai Motor suspends plant due to chip shortage. South Korea's Hyundai Motor Co. said on Friday it had decided to suspend production for 2 days starting Monday. It is Asan plant due to a chip shortage. The Asan plant produces 300,000 vehicles every year, including Sonata and Grandeur sedans. It said the suspension was due to supply conditions of semiconductor parts for the powertrain control units. In addition, Hyundai also announced last week that it would suspend production at Ulsan, its main South Korean plant, from April the 7th to 14th due to same component supply problems. Underscoring the severity of the global chip shortage crisis, Hyundai became the latest automaker to halt production because of this issue. So far, the company has managed to avoid the aforementioned crisis largely because it has maintained chip stocks unlike its global peers. Hyundai shares were down 1.30% as on Friday morning. Powell warns of rising prices but not inflation. Federal Reserve Chief Jerome Powell said on Thursday that a spending spike amid the opening of the U.S. economy along with supply-side bottlenecks are likely to drive up prices this year, but it would not translate into the sustained year-on-year growth the Fed considers inflation to be. According to the chairman at the International Monetary Fund event, there will be upward pressure on prices, which could be passed on to consumers in the form of higher prices. In addition, the Fed thinks it will be a temporary phenomenon, noting that inflation has been low for 25 years, creating a psychology of low inflation expectations. Meanwhile, St. Louis Federal Reserve Bank Governor James Bullard said that the Fed should not even discuss monetary policy changes until it is clear that the pandemic is over, linking future discussions at the regulator's board to the success of the vaccination program. Stocks rally on fading concerns over U.S. inflation. Global equities held record highs on Friday as easing inflation fears in the U.S. pushed up bond yields and lifted Wall Street, although softness in Chinese stocks held back gains in Asia. MSCI broadest measures of global equities earlier set a record high, ending at a break-even low, while Japan's Topix was up 0.6%. Chinese equities were the opposite, with the CSI 300 index falling 1.5%, leading the MSCI Asia index down 0.6% as strong domestic inflation data raised fears of policy tightening. However, an unexpected rise in new jobless claims in the U.S. combined with Fed Chairman Jerome Powell's reiteration on Thursday that inflation was not a concern helped to calm worries and boosted tech stocks. The S&P 500 rose 0.42% overnight to a record high, while the Nasdaq Composite added 1.03%. E-mini futures were mostly flat. Oil prices fall as investors watch supply rise. Oil prices are declining on Friday as investors anticipate production ramp up by leading producers and assess the impact of the COVID-19 pandemic on fuel demand. Brent crude futures fell 0.41% to $62.94 a barrel, and WTI fell 0.2% to $59.48 a barrel. Both contracts have fallen 2 through 3% since the beginning of the week after OPEC Plus members agreed to gradually increase oil production by 2 million barrels per day in May-July. However, analysts expect global oil inventories to continue shrinking as fuel demand rises in the second half of the year amid a global economic recovery. At the same time, concerns are emerging that renewed restrictions in some parts of the world to combat the spread of COVID-19 and vaccination problems could alter the outlook for oil demand.